following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. If you've been living in a cave, it looks like the guys who want Great Britain to stay are leading the guys who want them to leave. It seems like just a margin of error type thing right now. So I think this thing is still up in the air. But as Steve and I were talking about yesterday, you still got, quite a bit of safe landing area for that to change, even if they do vote to initially leave. I think the 2-year span of actually pulling out. I mean, there's a lot of things that can happen there. So don't know how impacting this is going to be. Even if the vote goes through, it'll be an initial knee-jerk type situation. But I think just the impact of that and the economic changes, as far as currency changes, treaties, blah blah blah, all the things that are snowballing after that, they may vote again, and then the guys who want to stay may win, even if initially it's the guys who want to leave win. So here's the British pound, forgetting all that rhetoric. Big move, obviously, yesterday, and then, some follow-through this morning. The big inflection points to pay attention to here, excuse me, the 240s, these are all in the scanner. Inflection points now, the only thing we've really got a chance to pay attention to, 145.37, 146.83. Haven't been up here in a long time, actually, on the British pound. 146.83 is going to be support. Top of the profile on the 240s, already past that. Might have a retest there. 146.83, 240 unfair highs, 147.08, 60-minute unfair highs. The euro, we're going to talk a little bit about the dollar in a second, but the euro just kind of in a long-term profile here. Just really, there's no leverage really at this stage. If you're going to trade the euro, I think you got to trade it from the short side, and I think you got to get below 112.94, 95 to really look at that as a trading opportunity again, and hopefully get a close below there. I mean, we kind of were, hovering below this area before. That's what stops are for. We got to get back down below it again, as Steve was saying yesterday, and I was agreeing with him, which I customarily do when Steve talks. Short, the euro. The block out the long side on the euro is probably in order here. And, the pauses in my speech, it doesn't mean I'm retarded. There's a whole machine of wheels back there turning in the background. And that's what the pauses are for. Here we go. Just kidding, guys. Here we go. So as we look at a couple of currencies, and we're going to get to gold and silver and copper in a bit. Somebody was asking for that in the den. Let's take a look at the yen. This is something that's just not acting right. Talked about maybe retracing back into 105.50. That's where we're at now. And we talked yesterday about possibly 101.33 in order on the downside before this thing really finds big support. Don't like how it's broken down below that 105.50. That was a big number before. Kind of going back and retesting that area, maybe a chance to get short this and trade it for another 400 points on the downside. I've kind of been leaving it alone since 110.40, but I think you might have a little opportunity again. Talked about passing on the 105.50 as we came down again. That's not what you want to see. And if you look at this downtrend in the yen, which means the valuation of the yen, the reason we're picking 101.33 is way back here, back in this general area, and that is 101.33. I remember it like it was yesterday, even though it was almost 2 years ago. That's the big number. That was the launching pad situation. That was the play defense against that line from a long time ago. Long time ago being 2 years. That's my version of a long time ago. Here's the dollar. All right, so we're sitting on support here. Good news if you're trying to short the euro. This is dollar support around 93.64. Again, wouldn't put a lot of weight into that. I'd like to see a daily close above there, then play defense. Still, if you look at the long term on the dollar, we're still kind of edging lower. So now let's get into gold, silver, and copper. Gold, talked yesterday about not buying this support around 1286, waiting till we get back down below there and possibly trading it for a ride down into much lower numbers. There's really nothing down below this daily unfair low here. You've got a little bit of a short-term trading opportunity around 1274, 1275. These are all in the scanner, as you guys know. Let me pull this thing up. So, daily unfair low is holding a little bit here, but I wouldn't put, a ton of faith into that right now. We've gotten down below. We've kind of done an intraday retest of that 86 area right there. We kind of got, but I think we deserve a little bit more of a rally back and retest that area. Again, you may have a trading opportunity around this 1274, 1275 up into 1286, but that's it. I don't really see this following through, going north again in a big way. I think we could kind of relax down into this thing. The Brexit, every time I hear that word, I think of Brangelina. Seemingly settling down, but again, anything's possible with that situation. I think the margin of error is just all that really the votes are determining there. I'm still showing July's continuous contract on silver. Underperforming a little bit gold. That's where the long-term profiles are on silver on the weekly. Silver daily situation, 1758 down into 1698. That was kind of a big number before 17. As you remember, that's where we broke down before. Seems like we more than likely could revisit that area, 1698, 99. Let's just call it $17 an ounce neighborhood. I think you don't really have a big risk reward scenario here. If you were looking at this yesterday, you could have leveraged off of 1758. That's the top of a profile there, considering what we talked about with gold, the Brexit situation. If you're getting up this morning and looking at this, I think, the risk reward, you got to play defense somewhere, stops above there. There's the targets, a little less than, 1-to-1 risk reward ratio. I think you got to just sit tight on this one now. And I don't think you should be buying 1698 right now either. So that's the situation on silver. We'll take a look at copper now. And it's somewhere. There we go. We'll be right back, guys. We'll hit copper and then we'll move forward.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to this show. Not a lot of economic things going on right now as far as reports, what have you. Barring the Brexit news. Here's the 10-year sitting right at the top of the profile, 103.7.5. I'm just looking at this as turn the rents the same way, breakout, retest, S&Ps. This thing is active, and you've also got a daily unfair low here, very similar neighborhood, 12.5 down to 7.5, 131 that is. And your target's up top on this one, 132.10.11 on the 10-year. And this situation with the S&Ps, I know we kind of had let's everybody put on their party hat because the Brexit thing got back to par. That's scary in itself that the market's looking for literally any news to just pop like that. But as far as being short the market, but I like how this thing got back in the fair auction yesterday. This is the daily. I like how it didn't close well. A couple of the global markets are out there. Let me just show you this. Let me go into the scanner here. Let me look at the NC's profile heat grid. And if we look at the daily, there's the weekly. Come on. Everybody got kind of happy, especially on the short term. Here's the 4-hour. Here's the 1 hour. Yeah, so I like how the S&Ps are really not participating as much in this, and I like how we've kind of closed in the profile, gone back and retested this morning. That relates to the 10-year in my mind, because 10 years at support, S&P's at resistance. The easier trade has been, I'd hate to be as boring as anybody, but the easier trade has been, as you've been watching the show we've been talking about, is just buy the 10-year. Maybe timing the S&Ps and trying to figure out which way they're going, up or down, is a little more difficult than just waiting for the 10-year to pull back and buying it every time. And right now, if the market goes up, 10-year kind of seems to spin sideways at worst. So I like the short trade on the S&Ps right now, believe it or not, and I like the long trade on the 10-year. But, picking one, get long the 10-year. That being said, we're going to go to my favorite sector here, the XLU. And we're going to see that the XLU is in a similar situation here, 49.88. We've talked about playing defense on that one, down to 4 or up to 49.91. Those are those daily unfair lows and weekly unfair highs. And nice little technical setup there. Again, you might be going, wow, this thing's too high. How can I buy it? Things on their highs go higher, guys. I think we've got John from Philadelphia on with us. John, you there?
Mr. John Logan, thanks for taking the call. Appreciate it.
Hey, man, good to hear your voice as usual.
Say, John, I wanted to ask you, by the way, thanks for reviewing the stock indices there. Wanted to ask you a very specific question on two of the ag markets, new crop corn and beans. That's CZ6 and SX6, and a very specific question. What levels, if penetrated on the downside, according to your TAS work, be it either daily or weekly, suggest strongly to you that a top is in place and a trend change to down is underway? What levels do we need to hit for you to think that, please?
Well, let's start with corn. It's a great question. We don't show this on the chart right now, but within the scanner, we're having new profiles attempt to appear. That's that yellow peel back. You don't get these on the chart sometimes. You get them on the scanner first. That's let me know that by Monday morning, we might have a new profile, especially if this is locked in yellow by Friday's close. Today's Tuesday. So we're just kind of hinting at it right now. That right there, and that's also on the new crop beans that's happening also. Currently, the huge long-term support's around 407, 408, and that's because the weekly unfair highs and the daily unfair lows are around those two levels. So that's major support. But looking at this and seeing that we've kind of broken down and retested and are kind of floating aimlessly, seemingly within this daily profile and have that weekly overhang in supply happening, we've come down, from the highs around 450 on this already down into 426. I don't see, a great place to really get a huge risk-reward scenario if you're waking up this morning looking at it as a trade. Yesterday, we kind of had that close within. It was past the noise area that we call the 10% area of the height of the box. We went back and retested it, early. Let me see when we did that. That was 3 in the morning. So I don't know if folks were up at 3 in the morning to get this trade off, but having stops above 436, I think we could actually pull back ultimately into 407, 408. That would be maximum support right now. If it doesn't happen, and I'm sorry to give you so many if, Johns, I hate it when people do that to me, but I'm a little bit more bearish than bullish right now for this to retest lower numbers. But if we don't get there before Friday, the good news is you'll have another profile to focus on the long term, and you'll have some more battle point areas to focus on. So, do I think it's technically turned, to totally be on the short side for a while and lean on the short side? I just think you've got a little bit of a trading opportunity with stops above that daily unfair high to trade it back into 407, 408. That's
John, I thank you on that. As I was, and by the way, I do appreciate you going through that in detail, and the market, looking at of course, the future's unknown, and trying to get a handle on any market in the future is filled with nothing but ifs.
right.
So looking at the possibilities is what we need to do. So thank you on that. Quick question. On the daily, I'm looking at the Dees Corn, the daily TAS profiles, and I notice on the Dees Corn dailies yesterday, you have the price bar itself, you have colored in yellow. What does that mean? And yes, what does that mean, please?
Okay, so Look, can I ask you a question? Because I wasn't looking at this yesterday. Did we show yellow in the daily on the scanner, or did you see that, or yellow peel back?
I wasn't paying attention, John. I can't answer that.
Okay. A lot of times on the charts, if we just dive back down into the profile, it will kind of indicate yellow just as a warning that, hey, we're back in the balanced area. It doesn't mean that a new profile necessarily is going to appear. The only time that means, and that is very explicit in the scanner, it will show that in the scanner, like a yellow peel back. Just like,
okay.
Yeah.
That explains it. Right. Got it.
Yeah. So it's just a little kind of, hey, on the chart, hey, we're back in the balanced area. So.
John, thanks so much. I'll sign off and just ask if you could do the November beans start on the next segment. Would be great.
Without question, will do. Thank you.
Thank you.
Yep.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Steve and I were talking a little bit about the FTSE and the British pound yesterday a little bit. So here's the situation on the FTSE. We kind of gapped down today to have rallied back up. I think we're both in agreement that this thing could easily see some much higher numbers. And here's the getting back into the 60, back above 6,300. Let me just pull up the continuous here really quick. back above 6,300 and using that possibly as a leverage point to move a little bit higher on the FTSE, especially as we kind of move closer to the 23rd here. That just could put some kind of euphoric feeling. I don't think the Brexit thing has really been keeping this index down. So I don't know if that's going to be a lot of follow through with that, but we could see at least 6,300 to retest to test that area, bare minimum. Let's go back to the treasuries here. We're getting a little bit of a move this morning. Not a lot to write home about. We've gone from 131.08.5 to 131.14.5. Taking a look at our long term on the treasuries again, you've got a chance to play defense. We came down and retested almost to the tick here. Remember, breakout, former resistance, now support. This might be the easier trade to latch onto when it comes to kind of market timing something. The S&Ps, as you know, can be a little frustrating, and they could go up or down. But the support breakout scene is on your side on the 10-year until it changes, of course. You know what's wild is, as soon as the patterns start developing now, they usually change them. But that 10-year's been pretty. When I say they, those evil people who control the markets, as we know, there are evil people out there that do that. And the S&Ps are coming off a little bit here now. So now we're black down below 2080. I think you got to, here's the defense area on the S&Ps if you're catching the show a little late. 2083 stops above there. I love how this thing acted yesterday afternoon for kind of a, hey, let's relax a little bit here and go south. I think you got a decent little opportunity there, decent risk reward. 2055 down in that general area. If we get a retest down there, that would be a great risk reward scenario on the S&Ps. Gold, just to give some updates here, kind of sloughing off even more. The gold is right at the daily unfair lows here at around 1275, as we had spoke earlier about, and 1286 is at unfair high on the weekly. So, what do you do with gold here? You might have a little bit of a trade and bounce back up into 1286, but I don't think gold is in, and it's, we get a weekly close back in the balanced area here this Friday. Then I think you really can use 1286 to orient stops around. But right now I'm not a big fan of going long gold. I don't know if you want to be buying 1275 here. It's a short-term trading opportunity at best, in my opinion. We've talked about silver. We talked about the XLU. Let's move into the XLF really quick. All right, so a little bit of a bid this morning. 2286. Again, our ultimate targets on this one with the 10-year seemingly on the launching pad again, 2204 on the XLF. Let's take a look at Tesla really quick. I wanted to bring this one up. Why? Here's the weekly on Tesla. Again, it broke down, retested that 12233 area. A lot of guys are day trading this. Wonder why. It moves a lot. 217.99, let's just call it 218. I was very surprised that we got back above there yesterday. Very surprised. That's what stops are for. Now you've got to get back down below 218. I had some emails about that. It wasn't hate mail. It was just questions. So again, we try to, if you look at the scanner and you're looking at things that are can be attractive. Let's just go back into the S&Ps real quick. We're going to look at crude in a second. Just a question from the den. You can come in here, you can do a lot of different scenarios. I like to do, okay, let's trade below, let's try to form a new box. These are target rich things that have been kind of going south. And there are also possible day trading opportunities for a little bit of a retracement type bounce, even though it's a 6 stock in general. I'm just choosing a manual sort here. And you got some, kind of green shoots on your side here. I apologize for moving my mouse so quick. John from Philadelphia is going to have a hissy, rightfully so, if I don't stop doing this. And I apologize for that. But, as we look at like below, you've got, we've got, a couple of stocks that are showing extreme negative connotations here in a market that's rallied pretty well. So Tesla was on this list, so now it's not. And, we want to wait for it to get back on this list, i.e. getting below that daily M for low. Bed Bath & Beyond, wow, imagine that. These guys are the J.C. Penney of the brick and mortar world now. So now, just case in point, Bed Bath & Beyond, weekly M for lows. This is, in my opinion, this could have some serious downside left, even so. And the cool thing about this one is 246.66. You've got a great place to play defense here, and you're also now eclipsing daily M for lows. There's something wrong. I know you guys are like, wow, Logan, thanks for telling me there's something wrong with Bed Bath & Beyond, like I didn't know that already. But there's no bids here, and the long-term trade is now game on when it comes to shorting Bed Bath & Beyond. Scanner just kind of lets you know, hey, confirmation here, and you can pick out some decent little situations. This is probably one of my favorite. If you're trading below profiles and kind of skirting along on the downside, and then you kind of rallied up to the maximum rally point here. This is CenturyLink, again, a stock that's just been ugly, and yesterday just kind of getting back into, you want to wait for this one to get back down below 27.55 and then just bang it down into those bare minimum daily M for lows. This is the weekly situation. Not a lot meeting that criteria right now, this minute, but these will, the cool thing is if you put a sword on like this, and I think you can have multiple scanners up at the same time. I'm pretty sure if you've got one IP there, you can keep multiple sorts up at the same time on different screens. This is a short advertisement for monitor companies right now. If you got different screens up, you can put up different sorts at the same time, or just set them up and put them in your custom list type scenario. And then you can see them dynamically update and put new candidates in as they're happening in real time, which is really cool. We'll be right back, and we're going to hit crude oil.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We're going to hit crude oil really quick. I usually combine those two words to basically make it CRUDLE, crude oil. But it is crude oil. And I've actually got a target on a short term myself personally at 49.02, and we hit 49.03. And this is the quandary that everybody goes through if they're day trading. Should I just take it out and chase it back up? Or I missed it by a penny here. And what do you do? Sometimes if you've got some things on your side as far as some points that are in your favor, you just want to all right. We've reached 49.03. I was hoping we'd pierce it. This is what I was trying to bank off of. These are the 240 unfair lows. God, I'd hate to see this thing rally from here and me be penny pound. What's the story? Penny wise, pound foolish. So again, I think we could actually come by and pierce this a little bit, but we've actually hit it to the tick and are bouncing a little bit here. So the long-term view period, and I was basing that on coming back and retesting also this 49 general area on the POC for crude. You really don't have a lot of long-term leverage here right now on crude, but I think we could come back and revisit some lower numbers, namely 47.58 ultimately on this, just to kind of find some lower support on crude and just be able to use some of the inflection points on the weekly and daily. Right now, crude's kind of a mixed bag. If you're looking for a long-term view on this right now, I really don't have one. We're just kind of, this tells the story really perfectly right here. A lot of times these fair auctions are explored completely. If you look back at crude, you'll see what I'm talking about here. A lot of times these inflection points are met and then retested. You just don't have a lot of leverage on crude right now. I don't, even with somebody with limited education like me, can see that. So as we look at this, the short-term inflection points to do some day trading and, kind of use some things to lean on. You got 49.03 sitting here, 240 unfair lows. If we get below there, I think you could actually use that as a little bit of a retest resistance down below. But right now, it is what it is. And at least you're at a battle point right now. Russ, I hope I've completely confused everyone by analyzing crude oil. Actually, there's just not a lot of long-term leverage right here. That's the bottom line on it. If you're going to do some day trading, we talked about the inflection point, so I hope that helps a little bit. The 10-year is kind of edging up here, which is kind of nice. Again, coming off support. I just want to state this has been a very attractive situation. You always want to try to get the high probability trade stops down below 131.075 on that one. Going to hit a couple of currencies really quick here. The Australian dollar, we've talked about the British pound, the euro. Just want to hit this one. Talked about trying to get back above and close above. This is the daily here, close above this 74.74, along with the weekly, which is 74.81. So you've got a pretty big resistance area there. We talked about this crowding it. I just want to see it close above and then come back and retest this DMZ from the daily and the weekly numbers. Not a big fan of shorting the Australian dollar right now. We've talked about that a lot. And we've got some good moves off of this from 71.69 down below. This is currency scene. We're going to take a look at Apple really quick. Not participating, to say the least here. So talked about getting back down below 98.64 and ultimately getting some lower targets here, using that as defense. That's happened this week. And now, which is very cool, yesterday these are yesterday's daily charts, by the way. So Friday we got the close below, we got the retest yesterday, which was just awesome. When you get these closes below and these retests, these are just great. Now you've got some conviction here. We're trading pre-market, it looks like around 95.15, or that general area. So you've got 96.43 to play defense against. You've also got the 240 unfair lows here, 96.30. And my little thing went off on crude oil right here. Did we get below 49.02? Yes. We're out of a short-term, very short-term short on crude oil right now. Now we're just going to have to wait and see. Just wanted to state that. Let me go back to what we were talking about here. My personal glory. We're going to throw that aside right now. So got the daily 96.43. You got the 240s 96.30. Got a nice little lid there you can play defense against. We've already retraced back up into that area. So I think now you've got to be looking at targets, initial targets 94.05, and then ultimate targets down below 91.76 on Apple. I don't see a lot of reasons why that's not going to happen. And you've got, the market kind of looking little launching padish here in general. 10 years sitting on the launching pad. I mean, Apple, if the market pulls back after it's looking, seemingly like it wanted to rally with the rest of the world and the Brexit fears just getting back to par at bare minimum, Apple's this relative weakness type trade. And if you go into the scanner, again, if the market rallies, Apple at best in this theory is going to go sideways. So if we go into Apple and we look at this thing, and we're going to say, what's trading below profiles on our daily here? Come on. What's trading below profiles on our daily here? Guess what the top one is right there? Apple, 2. Second day below. Daily profiles is right there on your radar screen, looking pretty sick. No green shoots going on. And I think you've got a great relative weakness trade. If you think the market's going to come off just a little bit, not completely cave in. I mean, you've got a lot of things on your side still when it comes to trading Apple. All right. Let's take a look at Amazon. This is one we just, block out the short side on this one, folks. So we talked about we talked about previously waiting until we get down into 695 and not shorting it and just waiting for support to happen. Now we've met targets at 722 above and backed off yesterday. What do you do with this thing now? You still don't short it. You still got to wait for breakouts above 722. We've already gotten into that 696 general area. Here's the new weekly profile this week. Maximum support at 678. If you get a market sell-off or pullback at all, and this thing doesn't pull back, then I think you still got to be looking at 695, 696 to buy this. But ultimate support on Amazon now is 678. Remember, a lot of times these fair auctions are completely explored. That will be the ultimate buy point on Amazon, 678. And I think that's the best hope for shorts, is just that area right there. All right, when we come back, we're going to take a look at Netflix, and then we're going to hit a couple other stocks, and we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Got Netflix up right now. 96.18 on for highs on the weekly. Talked about this weekly close 2 weeks ago, or a week and a half ago, whatever. Come back and retest in 96.18. Ultimate targets on this, 88.35. You know, Netflix, Apple, Amazon, you know, some of the big, heavy tech stocks not looking good at all here, technically speaking. Let's look at the NASDAQ. All right, so again, here's the September futures. Here's the daily. This means, let me fill up our scanner here. Let me go back into the indices heat grid, and let's look at the NASDAQ. Where is it? So many things up here now. There we go. So almost converting over breathwise in a negative territory. Probably going to see that this morning. Got a new profile here happening. Going to probably lock in pretty quickly. God dang it. Let me pull this up here really quick here. All right. So here's our NASDAQ chart. New daily profile appearing. Here's the weekly. Breath getting a little negative here. Weekly breath rolling negative this morning. 43.39 could be in order here on the NASDAQ. Got a 44.01 print this morning. Got to take a look at something here. I'll take a look at it after the show and report to you back in the den. All right. I want to take a look at Johnson & Johnson really quick. Yeah, I had some emails about this one. Is it a safety play? Is it one that's been outperforming? Without question, yes. That profile appearing below price action before, very bullish. You know, you see these types of things, and you if you go across the scanner and kind of pull up things trading above or below profiles, and you find the ones that are, and this is something we don't talk about that much, you know, these greens, light greens, dark reds, bright reds, these mean that how much farther we are above profiles at the moment. So when you go into the above here and you look at, we're in the NASDAQ here. Let me go back to the S&Ps. And you go back to the above on the green, and I can go down into Johnson & Johnson. There it is. You see that dark green right there? That means that we're well above profiles. So when we have a 1, well, let's just sort them by 1 here. When we have a 1 appearing like we do here, and we see it very, very green or dark green, that means, let's just go to Lamb Research here. That means that we've got a profile appearing well below price action first week. So you get pretty bullish scenarios just by that alone. And let's look at another one, AVGO. Let's take a look at this one. There's the daily, there's a weekly, appearing below price action. That's real bullish. And you're sitting around support on this, 155. So you've got two things in your favor on stuff like that. There's Michael Kors. What the heck? That's nothing I really want to play with. Guys, stay tuned for Larry and all the rest of the guests on TFNN all day. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.